Hello guys, welcome back to my channel. My name is Andrea. Today I'm again from the beautiful Switzerland, and in this video I would like to speak about if the BP's dividend is safe and sustainable. And in the end I would also like to show you what I think about their debt repayment. So the BP is a part of my portfolio, that's why I'm looking on it from time to time, and I don't invest in the BP to expect it to be a multi-bagger. I invested the BP because of a sustainable dividend and sustainable income, but I would also like that my capital invested in this company will appreciate at least with the rate of the inflation, and in best case the faster than inflation. They recently reported strong earnings for the second quarter. They was also speaking about dividend. They raised the dividend. BP have a policy to pay sustainable dividend and raise it at least 4% annually. This of course raised the question if the dividend is sustainable or not. So as we can see here on this table, BP paid 2.5 billion of the dividend for the first half of 2025, and around 2.5 billion will be paid in the second half of 2025. In the second quarter of 2025 they had the free cash flow of 3 billion, and in the first quarter they had a negative free cash flow of minus 0.5 billion. This was due to the big capex investment. The BP, when it comes to dividend, like to reference on their operating cash, which was 6.3 billion in the second quarter, and altogether in the first half of this year it was 9.1 billion. So what is the difference between operating cash flow and free cash flow? Operating cash flow is capital from the operations before capex expenditures, and the free cash flow is the capital from the operations minus capital expenditures. So this free cash flow, we can say, is the money that actually stay in the company, and this money can be used for the dividend payments, share buybacks, or repaying of the debt. And when it comes to dividend in general, I always like to look if they are covered by free cash flow, because this is the money what basically staying in the company after all other expenses. So why the BP is referencing the operating cash flow instead of free cash flow? This is because the management say operating cash flow is more consistent and it is more simple way to understand their investing frame. The BP have a capital allocation framework which is supposed to maintain a strong balance sheet, pay capital expenditures, and pay the dividends. I put this table together because I am not interested as much on the dividend coverage by the operating cash flow, but I like to check if the dividend is covered by a free cash flow. And as we can see here, in the second quarter of the last year and the second quarter of this year, they had reported strong results, which also result in the strong free cash flow. It wasn't as good in the third and the fourth quarter of the last year. In the first quarter of this year they had even the negative free cash flow. So the dividend needs to be covered by some other resources, meaning that the BP lent the cash what they used for dividend from other sources, like divestments. They are now selling the part of the business which is not their core business, so they could pay dividend from this money. Another option, if they have a negative free cash flow or not enough cash flow, would be to pay the dividend from the debt. So they borrow money to pay the dividend, but this wasn't the case until now. So to make a conclusion here, I continue hold my BP shares for the dividend, and I think they will be able to maintain this dividend without paying it from that. But I think if I look on the free cash flow coverage, it looks okay, but it don't look great to me for now. And I'm asking myself if there will be some recession next year, if the oil prices drop even further, if they would be able to cover the dividend from their free cash flow. Of course, then they have the possibility to not making investments or not repaying their debt as fast as they do it now. And speaking about that, they have a debt of 26 billion, which is down from their 27 billion, which they have on the beginning of this year. But it is still up from 22 billion when we look year over year. And the management say that they have a target to maintain a strong credit rating, and they want their debt to become between 14 and 18 billion by the end of 2027. And that this raises then the question for me, because this is very ambitious when I look on the free cash flow and the amount of dividend what they are paying, and also why they are doing share buybacks. Management announced the second quarter that they repurchased shares in the value of 750 millions. And I'm asking here why they do not pay their debt back instead. And share buybacks is something what I like at the fast growing companies. It's not something what I like as much as the companies like BP. And I think the reason the companies like BP are doing share buybacks, it's because the less share there is on the market, the more earnings per share the company have. And earnings per share is used like a base for management bonuses or management compensation. So they are using excess cash to buy back their own stocks instead of repaying the debt, in order so that they have a higher earnings per share and a higher bonus. So this is something what I don't agree, what also makes me a little bit worried, because their debt is still manageable, but I would like more if they would reach their target of 14 to 18 billions of debt by the end of 2027. And I'm not sure if they can reach this target now. So to sum things up, the dividend the BP is paying is sustainable for now. That they have now is manageable with the free cash flow they have now. Divestments from the non-core business can help to repay this debt, but it's also not the state where I would say that it's great and where I would recommend to buy this stock. So I keep holding my BP shares. If we will see some recession and oil price drop, and also oil companies, their stock prices will drop, then I will look closely on the BP if the dividend is affordable, and if yes, I would buy more, but I don't think that now is the right time to buy more BP shares. But of course, as usual, this is not a financial advice, and you should always speak with your financial advisor or make your own due diligence before investing in anything. So I hope this video was helpful. If yes, please give me a thumbs up and subscribe. So I hope to see you in another video. Bye!